Welcome to the Financing Simplified Podcast with Anthony Venuto. If you're looking for answers to your financial questions, let Anthony and his network of friends and associates answer regular questions that regular people have about their money. Thanks for tuning in. It's time to start simplifying your finances.
Welcome back to another episode of our Financing Simplified Podcast. It's been a while. We're back and we're bringing you exciting content. Today, I have the honor and privilege to bring in Chandler. He's a lawyer and a lot of interesting conversations happening right now with pre-construction, what's happening with closings, what are we experiencing on the street right now. But first and foremost, I want to turn it over to Chandler. Tell us a little bit about yourself.
Thank you very much. Talking about myself. All right. I'm a lawyer, as you rightly said. I do transactional law for the most part. I used to do litigation. It was a little bit, that was my first foray into law. I found that it was exhausting and no one said thank you. So we kind of converted, or I decided to change my practice into a transactional business where we close, deals. We do wills and estates. I do some estate planning, executor work. We do corporate restructurings, mergers, and acquisitions, albeit, not the 500 million to the tune of billions that some of the big bay boys do, but we still do several millions in dollars at times. And the small things too. It could be a nail salon or a hair salon to, steel manufacturing and, tool and die. So we do a little bit of everything, but real estate is by volume our biggest area. We're in Bolton. We're right in the heart of Bolton. I've been practicing now for 9 years. I can't believe it. I remember when I was called. I'm like, in 10 years, I'm gonna have an Aston Martin, and I'm gonna do great. Now I'm at 9 years. I have crippling mortgage debt at the rates that they are right now, and I'm still paying off the business. I'm like, all right, 20 years, I'm gonna get that Aston Martin, and it may never come. But anyway, thank you for having me. Happy to talk with you.
Well, I mean, obviously, yeah, speaking of mortgages, speaking of everything, I think a lot of people are feeling these pressures nowadays, and who better to, sort of explain from different angles what's actually happening in the industry, and especially with, being an entrepreneur is first and foremost. I believe it's interesting. You said you have an office in Bolton, we're located in Kleinburg. It's trying to build that business out, sort of that mom and pop, like you said, there's a lot of big boys in the Bay Street area, but I think when it comes to those small transactions, like the hand holding, that's what people really, really want. And especially nowadays, I feel with, we get lots of calls with clients that are buying or trying to close on their pre-construction, and man, oh man, are they struggling right now? There's a big problem. Tell me, you get to see it from a different perspective. What are you seeing right now?
Yeah, you're on it, man. It is unusual. I mean, we went from seeing no problems at all, no real questions asked by some of the builders to now they're asking for everything but your firstborn in order to get you occupied. I'm finding that in occupancies, they're asking for proof of change of address in advance for you to get the HST rebate, which would otherwise, just for anyone who doesn't know, most people do, but if anyone who doesn't know, when you're seeing an advertised price for a pre-construction condo or house, typically that price is advertised assuming that you're going to occupy it as a primary residence, or you're going to have an immediate family member occupy it as a primary residence. And that, there is a calculating formula, but at the cost of property in the GTA, it's always going to be about $24,000 is a rebate. So presuming that you are going to use it for investment purposes and you've advised the builder that, expect the whatever advertised price to be $24,000 higher. So now they're asking for proof of change of address ahead of time, something I hadn't really seen. They're also asking for mortgage pre-approval letters or letters of assuring financing. Alternatively, they're asking for proof of your money, like to say, all right, well, if you're not going to get a mortgage, show me what money you have. Get me a financial statement from your banks. Show me the proof of the money in your bank account, which I find a little perverse, but I get it. And now they're building it into the agreements of purchase and sale when you buy it, that you have to do these things. And what's crazy is you can't just get a letter that says you're pre-approved and we'll lock you in for a year. They're expecting it to be updated, and updated is arbitrary. It could be 30 days. So we're seeing a lot of that, and that can be tight because people who qualified for the mortgages when they originally purchased these properties 2-3 years ago may not qualify for the same kind of mortgage or any institutional mortgage at this point, which puts them in a bind. They may have the financial capacity to buy that property with a private lender, but the private lender is not going to give them, I guarantee you're going to get funding. That's not what they really do. So they may be able to do an interim closing where they put the minimum remaining deposit down, but they may not get access. I've had clients who just didn't get access. They couldn't get the letters together. So for 3 months, they've been paying occupancy fees, but they couldn't get access to the property. Even though it's insured, they had to give their insurance binders ahead of time. So I'm seeing that. I've seen several requests for extensions, and the builders are willing to accommodate much more than they would have been before because everybody wants to close, but it still comes at great costs for the buyers, for the clients. And then I've just seen clients just not be able to close. Full stop.
It's interesting that you point that out because it's like there's so many different nuances within the closing that people, especially a lot of buyers, are not 100% aware of. We were working with clients back when the market was a little healthier, right?
That's a good word for it.
We're seeing 2019, people were buying paper flippers, right? They're like, I'm going to buy this place and I'm going to rent it out and I'm going to make a boatload of money. And the carrying cost, everyone was willing to shortfall on these units. But now, as I said, as the government continues to keep rates elevated, yes, we saw a little cut. As I said, you don't have to give legal advice. This is not a show where if you're looking for legal advice,
none of this is
you
legal
call
advice.
Chandler directly and find out. But as I said, like what's happening right now, because I have clients that are sort of calling us saying, I can't close or I need to do this. What are the outs? Like, are there even outs?
That's a tough one, man. There's no clean out. Like some people have, even as late, I guess late would be the word, as last year or the year before, I had some people, particularly when the market was, I want to say cratering, and I think that's a fair word for it because the appraisals were coming back. Listen, before I get into this, I think it's important to kind of note something that's really critical about your purchases, even in your pre-cons. Your appraisals are really critical, because the banks are relying on these appraisals. And if they do not, and remember, the appraisal companies, now this is not something I know definitively. No one has explicitly stated this to me, but it feels pretty obvious. So it's a kind of Occam's razor here. So, the banks rely on the appraisals to get you your mortgage. And if the appraisals come in low, you're going to have a shortfall. And the appraisers, while the banks were aggressive in lending money, were giving really good appraisals because the lenders wanted to lend, and the appraisals they were farming them out. It was great. But as the market tightens, the bank becomes concerned and they have less liquidity. They don't want to lend. The appraisers will become very conservative, overcorrecting, likely because I would imagine if they continue to give bad appraisals, they either get fired by the banks or they'll get sued by the banks. So they have to be, they're very, very, very concerned. So having said that, this let's just say this drop or precipitation in appraised value happened around a couple of years ago. And I saw it started a couple of years ago, really hit last year. And I saw people just saying I can't do it. I just can't sell my house. It's just not worth it, even after I've put the renovations in. So they're willing to lose their deposits and even buy out of the deposits. So there's some people who do that. That's a really tough thing to do. I typically, we try to do everything we can not to do that. Because it really hurts. You could lose 150 grand like that really quickly, right? You lose your deposit in your purchase. You can't sell your house. You bite the bullet. So that's an option, but it's really a last resort. You can ask to try to assign if you can find someone on a pre-con, or even on a resale home, but they're very rare, to see assignments on resale homes, or
you're paying for it.
Yeah. Or you just say, please take this from me. So, and what happened was if you're looking for a profit, now I'm really going down the rabbit hole. I'm sorry. But if you're looking for a profit on the assignment, you have the anti-flipping legislation, and now you have to treat the thing as income. And there's HST that you're expected to charge on it. So they really kind of tighten it in. So if you could try to assign, but you likely have to assign at a loss or break even if you can find someone. There's extensions, but ultimately, most of them just fall to private lending.
But ultimately, so for viewers that don't understand, pre-construction or resale, if the contract states that you need to close, you need to close.
Yeah, of course, there's going to be conditions in any deal, and you have to honor those conditions. You can't be for example, you probably shouldn't, use it conditional on financing and then say, sorry, I couldn't find a mortgage at 1.2%, so I'm not buying it. That's not really good faith negotiations.
Although there are some builders that are offering some pretty good incentives
Yeah.
for mortgages themselves. I guess they're directly funding them.
Yeah.
I know there's one out here in Vaughan there. They're offering like 2.5% for 2 years.
Wow.
Or something like that.
That's great.
2.7, because sure, they want to sell their inventory, right? Ultimately, they don't want to get caught with their pants down. But interesting, you brought up a couple good points. One was the appraisal, which is huge. We tell clients like, look, you can buy this property, but I mean, if you're buying in an inflated market, if that value doesn't come in, and those appraisers, remember, although they don't represent the bank or the client, don't bite the hand that feeds, right? Like, if they don't want to lose their licensing or their ability to provide mortgages for a major bank, right? That just doesn't, you're just taking food off of their plate. And then interesting enough, in one of the areas around where we are, talking to people, hearing stories, there was a house that, and interesting you said that, because there was a house that originally had sold with the launch back in 2020.
Is this a pre-con or
pre-construction home?
Okay.
The person backed out, and it was a $350,000 deposit. Okay, $350,000 deposit.
Ouch.
So they had to walk away. Who knows how that ended up playing out?
Yeah.
So then they ended up selling the house to somebody else. The builder sold the home to somebody else. But then that person backed out. That person, couldn't close. So that builder, like I said, I'm not throwing anything against. A law is a law, whatever the case is. I mean, this is up for interpretation. You can leave it in the comments below. But that builder collected $350,000 from one person, another $350,000 from the other person that didn't close, plus the upgrades. I'm assuming the upgrades were somewhere in there.
Yeah.
So they made almost $700,000 on this house, and they're still selling it for the same price.
Yeah, well, therein lies the rub. If they're selling it for the same price, you're right. It could be a windfall, but yeah, I mean, it is. That's true. Like, it's a contract, and you could say you can raise the pitchforks and the things against the builders who are doing that. But just to be fair, like, I don't want to crucify the builders in general, because some of them are, like you said, are cooperative, and other ones are. I know that other ones have given. From clients have told me they've given a part of the deposit back or all of the deposit back. If they're sympathetic, but they're usually only doing that if they have confidence that the building is going to be resold. And most of them do not do that. Most of them do take the deposit. Yeah. And I don't, it is their contractual right, but that's. If that case is true, that is an unusual scenario in my experience. But my God,
it is.
If you get a 700,000 windfall, that is crazy.
Because we don't want to say names and stuff like that.
I believe
liability purposes.
I believe
as I said, it's just really interesting to see how the dynamics are shaping out. And I think a lot of times, at least for me, is like, I've purchased 3 pre-construction homes in my lifetime, right? It's been and we've always liked the pre-construction because we can sort of customize it. You're the first person to live in it, whatever. Listen, whatever floats your boat. But it's always, at least in the past, it's always been something, hey, you buy it at this price, it goes up. You buy it at this price, it goes up.
Not so much now.
We've learned a valuable lesson over the last couple of years. I think it's really interesting. Let's see how things play out. But I think for a lot of clients, like, especially going through the transaction, I mean, from our perspective, we always defer to the lawyer, right? It's like we sometimes we know the answer to that question because we've been around the block a couple of times, but it's not an answer that we're comfortable giving. Just like, you know what I always say, Chandler, we stay in our lane, right? I stay in my lane, you stay in your lane, and then we're all good. But like, for clients that are going through the process to close, a lot of people don't really understand it, because we're getting these questions. It's like, well, if I don't close, okay, big deal. The builder takes my deposit and that's it. And I'm like, not really. I mean,
no, there's still more liability to it.
They can get sued for the shortfall. Just like
they can get. Well, actually, sorry to cut you off, but they can. It's not just the shortfall. Like, I mean, you have to each. Again, there's just, I'm not giving legal advice. If anybody wants legal advice, you can reach out to me. I'll give you my contact information at the end of this.
At the end of the show.
But I can tell you that, like, the devil's in the details for all of these contracts. Like, every contract is unique, although most of them have the same standard terms and conditions about defaults. Like, you forfeit the deposit, you got legal costs if they have to relist. If they make less money, you could be sued for the difference. I mean, there's some of them say you can still sue them anyways. They'll say, not only do you sue for the difference, but you sue for my carrying costs of my mortgage on the property, or the prorated amount of the realty taxes. Like, they could. Now, could and would are two different things. Now, it's first of all, for my opinion, this isn't legal advice, but my opinion is it's kind of bad for business if you get the reputation of constantly suing the people who couldn't close. So I don't actually see it as often as as I'm told it can happen. But the deposits, absolutely, and damages usually on top of that are often sought by demand letter from the lawyers for these builders. But yeah, people seem to think, oh, I'll just lose my deposit if I walk. No. There's always, and that's even on resales too. Like
I know, absolutely.
There's a conscionable and an unconscionable amount for the deposit to take. I mean, there's already case law about what is and what is not a conscionable amount of a deposit, like how much of a percentage of the deposit. Like if I gave you 80% down and then I couldn't close, and you're like, well, I'm gonna take your deposit. It's not gonna, the courts, if we had to go to courts, they're not gonna be like, well, 80% of the deposit or 80% of the purchase price. If you just took that, that's an unconscionable amount of money probably. So like there are on amounts, there's amounts that say like, is this enough money to just say it's forfeited even if you made more money later? Yeah, it could be the case.
So what you're saying is to viewers out there, those who are looking to buy regardless, is always refer to a lawyer because it's very, like, it's interesting because the last two homes that we bought, there was no cooling off period when we signed with the lawyer. When we signed with the builder.
Was it a condo?
No, it was a house.
Oh,
it was a house. Wow. So
they didn't give you an opportunity to.
No, there was. So originally, I'll tell you like quickly on the stories. The first home we bought back in the day, we had the 5-day window to cool off. Yeah. We had lawyer review, that's fine, right? If there's any amendments, good luck, have fun, right? Those contracts are literally, at least in my opinion, in favor of the builder. But the last two times we bought, the minute we signed that paperwork and we left that deposit, like the first initial 5,000 or 10,000. That's it. You're contractually obligated. Now, there's no law that says that you have to have a cooling off period, or is that?
No, a contract's a contract. With the Condominium Act, it's different. There's always a cool down period. One thing that people I think seem to make a mistake with is that they think the cool down period in the Condominium Act, which is 10 days, or 7 days? Why am I drawing a blank right now? Jeez.
Well, anyway,
but in any case, it's that cool down period, which they'll notify you of, they'll tell you about the cool down period anyway. The builders typically do, and it's in there. But that they use that as a negotiation phase. Like, oh well, we'll buy it only if you cap these development charges or you remove these fees, and that's not what it's for. Like you can't go. You can try, but the cool down period is you need to make your decision unequivocal. Like you have to tell them in an email, or the lawyer tells the other lawyer, we're not buying it. Goodbye. Like with all respect, we're not buying it. It's not, we'll only buy it if X, Y, Z. That's not unequivocal. So you can't get out of your deal like that. So people make that mistake a few times. They think the cool down period is for an ability to kind of renegotiate with their lawyer. We try, or we do what we can, but they don't have to. No. So, but with the homes, there's not like I've seen deals that are firmed up right away. I've seen deals like yours. I've seen deals that come to me and they're firmed up right away. I would always recommend you add, can I have a clause about reviewing with my lawyer and see what they say? Some of them may just say no. Like
some of them have their purchase agreements already put on their website so that you can download them and already provide them to the lawyer to do them. So check the builder. But it's interesting because like I remember back in the day that was like, I'm talking almost 15 years ago, our first house, right? There was the whole thing about going back to the lawyer about capping the fees, but I think builders are doing a really good job. Yes. They're already trying to,
you're right,
to streamline that process. Yep. But it's super important. You know how many times we're working with clients and it's like, did you get a lawyer to just review? Because they don't understand, especially with condos, there's so many hidden things. It's not like,
oh my goodness.
But it's not like what they're going to be. No, but what you're doing is as a lawyer, they're going to say, by the way, like, there's going to be this potential. So budget, or like based on your experience, like we have clients that get footed on, like not on occupancy, on registration, or on occupancy. It's like, they're like, we didn't anticipate this extra $15,000 or $20,000.
As a general rule, the closer you get into the city, the worse they get. And people don't realize the condos carry a lot of heavy costs. And the other thing you need to be mindful of is that as the interest rates are high, let me tell you one more story. I think it's worthwhile. I had a client close in Brampton, and the builders are pretty like, I'm not gonna name names, but the builders are not a nobody builder. Like they're
big boy.
Yeah, they're one of the bigger boys in the builders. Anyway, they closed in Brampton, and they were in a condo townhouse, and they're an end unit near Highway 7. and there's a ravine in the back and everything like that. And there's a lot of trucks that go back and forth. So their fencing, they obviously have to pay for fencing. The neighbors' fencings, I think, were like $3,000 or something to that extent. I can't recall the exact amount for their fencing, but it was over 20 grand. It's fencing. You understand that? It's just build a fence. I'll build you a fence for 20 grand. I'll quit my job. If you can give me 20 grand to build your backyard fences, I'll never do law again. Like, there's no way that costs fucking that much money. And we fought with the builder's lawyer. Like, what is this? I said, this is an unconscionable amount of money. You must have known that the money would cost this much money. And I even said, I bet you that there's no right to charge. I said, well, it's soundproofing and special walls, barrier walls we had to include because of the trucks and the ravine.
Hold on, they put that on the
No, I just said you have to pay for fence. Oh yeah. Yeah, the buyer had to pay it. And that actually screwed up a ton with us. The buyer ended up having to go with a private lender, and because like it put it over, like he doesn't have they did not have the financial capacity to cover that jump. I mean, don't forget, there's all that other stuff too. Legislation just passed a little while ago in the province where they're really getting rid of the NOSI security interests on these things because I don't really necessarily think that it was the Reliance Home Comfort or, what are these other companies? Yeah. Enbridge actually, I think runs it through Reliance, but then there's like Green Energy or whatever. And there's
Simply
Simply Green. So
Sorry, we're not saying any names, but
no, I'm just telling you, these are companies that, I'm not throwing shade. I'm just saying these are the companies that typically will provide things I see on these agreements. But anyway, I don't think they're the actual real target for this. For this legislation, the legislation was really to stop these NOSIs really becoming mortgages or being converted into mortgages, but ultimately they're going to get slapped too. In fact, we were just closing a deal last week with the client who was refinancing, and the banks, even though bluntly the banks are wrong. Like they're like, oh, the security interest is registered here. We need a postponement to put it behind us. I'm like, bro, all the security interest says is I own this tank. It doesn't have anything to do with the fucking house. Like your mortgage is secure, but the banks don't care.
No, they want you to lift it and reapply.
They don't give a shit. They want it gone. They want it in second. And so we called Reliance, and they're like, "Oh yeah, no." They sent me a payout. They're like, "We don't do postponements. We do a discharge now, and then we re-register it later." I think it was like we charged us $200 or $220 for it, and we were communicating with them and saying like, how can we pay you this? Like, can we do a wire to you? Do you have to get the certified check? And then another call on the phone, this lady's like, who she was running the discharge department. She's like, oh no, you don't have to pay that. We don't do that anymore. We don't do it because the land registries contacted us and said they're going to be vacating all of our security interests across all the properties that we have security upon.
So you're saying each lender sort of works on their own guidelines and their own.
Well, all of them will ask for the postponement. Any lender with sensibility will ask for the postponement because that's what all lenders do. I should also say, I think it's senseless to ask for it when it's only like securing on a hot water tank because it's not actually part of the property. It's just chattel or a fixture to the property. But if one of them's going to ask, then they're all going to ask. So I don't find that. What I thought was bizarre is that they're like, if you want us to discharge it still, pay the $200 or $220 and we'll discharge it. But if you wait long enough, the government's just going to come and discharge all of them now anyway.
Yeah, there's some funny stuff happening there. Not to get off on a tangent, but I think, like I said, you're bringing up the whole point is to have the contract review because I have people that I know personally that we've helped out and they bought in a certain area, and they are part of a water heater service, and we're not going to say any names, but they're paying about $71 or $72 a month for the water heater, and it's contractually obligated. Yeah, if they break the contract, it's outrageous to pay that kind of money. And then to buy out the water, it's like if I want to buy out my water heater, I should be able to purchase it. But the fact that, as I said, that's in the contract, the clients sometimes unwilling, they're just like, yeah, whatever. At this point, I have to sign. I have no choice. I can't. Like, is there a cool like? And I didn't know this, but they were like, someone had told them that they have 5 days to figure that out, and I'm like, I don't know. Like, I really don't know.
I've heard that someone said that they were able to communicate. I had a client who was able to communicate with them saying, I'd rather not have the tank and buy out and I'll buy out this thing. And there was some, it was not done through our office. They communicated this directly and they were able to get it somehow resolved. But I've also had clients, like even my father, I think what he was buying, he's like, I told the builder, I don't want it. Like, I don't want this. I'm going to get my own. And the builder said, no, you have to take it. You don't have, if you sign this contract, you're taking it. we are not allowing you to go get your own unless you pay out this one and arrange for that with the company.
Because
and,
they have to close it for occupancy purposes and all that
so,
other good stuff.
Yeah, and that was a condo townhouse as well. So, but yeah, I'm seeing it a lot. But these NOSIs that they're registering, apparently they're all supposed to be going. That's according to her.
So what is an NOSI?
Okay, that's fair. An NOSI is a notice of security interest.
Okay.
It is often in the fine print. Not all of them, by the way. Not all of them do this, but in the fine print of your rental agreement for usually it's a water softener or a tankless water heater or hot water tank, furnace, AC unit, anything HVAC. Like it could be a combo of any of those stuff. It's whatever you get through the company that's providing it to you. There often is a little thing in there saying we can register this as a security on your property. And so basically as soon as you take off that sign off on the contract, they can send it to their I don't know, their legal department, or they contract out to somebody, whatever. But they will have that security registered on your property, and the value of that registration is typically the value of the contract, not the value of the product, but the value of the contract. And it doesn't move, right? It sits there at that price, just like any other mortgage. If you had a mortgage for $1 million and then you paid off half of it, it's still going to show on your title as $1 million, right? But like, because it's set in stone at that time. You know, it doesn't get updated with your payments. So the same thing happens with your NOSIs, these NOSIs. But the security interests this is only to do with these products. That's why I think it's asinine when the banks are like, we got to get rid of it.
So let me jump in for a second.
Sure.
So for the people, especially nowadays, I know a series of people that had to get a new furnace, new air conditioner, new water tank, all of that. And it's obviously all on rent, except the air conditioning. It's all on rent. When someone sells their home, what's going on there?
Well,
you assume it, right?
Yeah. Well, this is important. This is where the realtors, I really want the realtors, especially if they're listening to this, is to know is that don't just assume it's a hot water tank rental, because they all throw that in the agreement. I like that it's in there, if applicable. I like that part, but almost all of them have rental items in an agreement of purchase sale. Hot water tank rental, if applicable. Do your due diligence and make sure you know whether that's in there. And there's also clauses, I know that they exist because I have my own, but there are clauses that some brokerages have that say, like, just in their schedules to the agreements of purchase and sale, these OREA forms, they'll say, just to be clear, like I'm paraphrasing, obviously it doesn't say just to be clear, any security registrations of this property are going to be your problem as the seller or vendor. You must discharge it. I'm not responsible for anything. If you really wanted to play hardball, I've seen, and we've done this, but I've seen some lawyers say, like, I agreed to assume the rental. I didn't agree to assume the security, right? And that becomes like a standoff. And I've also seen people, is it a hot water tank or is it a...
So ultimately, people will come to you and say, or go to a realtor and say, or the realtor will go to their clients and say, look, they got a rental of the hot water tank. They got a rental of the furnace. This is what you're going to have to take on when you do purchase this house.
Yeah.
But not everyone does that.
No. I mean, maybe. I don't know. I couldn't talk for everyone, but I can tell you definitively that we have deals all the time where, and it gets so messy on something so trivial, honestly, at the same day. Like, you're talking about $1 million plus properties and people bickering about hot water tanks.
Like $1,000.
Yeah. And I'm like, look, and if we really billed you by the hour for this, like, it would be twice as much as you're paying for the thing, but we don't. But yeah, I don't think enough is done on agreements of purchase and sale by everybody to make sure that they know, not like, what's being rented and what's being assumed. But a lot of that concern is the notice of security interest, because if you're buying the property, or if you're the seller and you have that notice of security, and a lot of them don't even know they have it. Like that guy I was refinancing last week didn't even know they registered it.
A lot of people don't know.
No, of course, because they signed they don't have to have it legally reviewed. Like, they're like, rental, this is a price, whatever. Fine. And that's it. So like now we have to go through the postponement and the digital.
And that takes time depending.
Yeah, because they're so damn slow. These fucking they're so slow to get a response. And look, I don't know what's going on in the back end for these
providers.
That's a good purveyors of HVAC,
heated water and cooling air.
Yeah.
Right?
Purveyors of stuff like that. I don't know how busy they are, or if it's just a lot of high volume or turnaround, or a lot of disgruntled people who don't know what's going on. But like, my God, and the banks too, they're so slow to get back to you. They're so overburdened. But like, I also think that the people there are in over their heads a lot of the time, and the banks are just trying to.
Don't even get me
Yeah,
started.
I know, it's another argument. Like
that's a whole different other conversation.
Yeah, but like they're in over, like it's tough for them. So, but they're slow. So if you're asking like why, does it take a long time? Yeah, it shouldn't, but like I don't think there's enough people that are actually present to help with the job. Like you try calling the extension and it's like you leave 13 voicemails before you get a hold of somebody. You're better off just trying every 15 minutes. And then maybe you'll get a human being. Like it's a while.
And this is why it's important, especially on any transaction, it's important, but to get all the documentation to the lawyer with a sufficient amount of time to spare so that you can do your title searches and reviews and all the other stuff that's required of you to register that property. Because a lot of people don't understand, a lot of viewers don't understand when you, especially those who are buying the first time, you have a duty to not only the client, but also to the lender.
Yes. Yes.
So how important is that conversation?
Yeah. I mean, we have, if you're doing, if the lawyer's doing their job properly and doing their CYA, they're cover their ass. But if they're doing it properly, you'll get them to the clients to sign an acknowledgement of conflict saying like, or a joint retainer, but in this case, it would be an acknowledgement of conflict saying, hey, look, I work for you and I work for the bank. And neither of you can ask me to lie or withhold information to the other because the bank is relying on our statements in order to fund you as the buyer. And so that's permissible. Like there's nothing that's standard. Yeah. Very rarely does a financial institution carry its own lender. You'll see them more in commercial transactions, like actual business loans or like commercial loans, not like real residential properties used for commercial purposes. That's not what I mean. I mean like commercial industrial buildings, like like a Bank of Montreal will have its own lawyer in Toronto, and RBC will have its own lawyer in Toronto, and like they'll do that. They can do that too.
Yeah, those are like
usually. But in these cases we do the same. So I mean, one of the things that a lot of people don't realize is that a lot of people rent their basement apartments, and I don't know what the statistics would be, but I would suspect that most of the people renting their basement apartments in the GTA don't tell their lender that they're renting their apartments to the GTA, and probably don't tell their lawyer that they're renting apartments to the GTA. If their lawyer knew, they would have an obligation to notify the lender that they're renting part of the place out. And so that is something people, I got to remind people like, listen, you're not allowed to do that. Take that information with what you want, but like, you're not allowed to do this. And we notify them that.
Because it could be a rooming house.
Yeah. Oh,
that's
God.
That's
their fear.
That's what the bank will.
That's their fear.
Assume.
Yeah, like that's their fear. It'll be like one of those places where they're like people are getting like $2,000 a month and they're sleeping on a floor. Because you've heard this. It's been released a little while ago. I'm not going to say where or when, but you don't have to look very far to find it on the Google. But that's what they're worried about. They're absolutely worried.
But in that aspect, everything illegal is happening from the landlord or fake landlord at that point to the fake tenant, because it could also be someone that is not technically licensed to even be here. Could be an illegal immigrant. So there's a lot of transactions where it's not just the landlord's problem. It's a little bit of everyone. Yeah. So, but you're absolutely right.
Isn't it always the landlord's problem?
Listen, the resident. It was a joke that an old lawyer and a mentor of mine, when I was working there, he was doing transactional work and he was at my old firm, but he kind of joked. He's like, "Why do we even have residential leases anymore?" He's like the landlords get screwed. Like you can't contract out of it. No pets. No smoking. You don't. You look how long it takes to get through an eviction. Look how long it takes to.
It's an Ontario standardized lease right now. Everything's standardized.
Yeah.
So it's what's enforceable.
Very very little. You can put some parameters in it. But they always joke like, what's the point? Like they already have everything they need in the Residential Tenancies Act.
Speaking of points, we've trying to wrap up here because it's been a really interesting conversation. But Chandler, tell us where they can find you on social media, your website. If they need legal advice, where can they find such an experienced young man like you?
So I'm social media adverse now. So I basically do not. This will be the first time I'm going to be live on something probably for a bit. We have a website. It needs to be revamped. If you use your phone for it, it looks really good. But if you use a computer, it looks like it was done by a bunch of kids in high school, who did a good job. That's because it was. These kids did it in high school. They're good kids, but the website needs advanced. But it's CaledonLaw.com. That's like the town of Caledon, CaledonLaw.com. So just www.caledonlaw.com. The business is called Palmatier Nichol Professional Corporation. We are currently for the next 4 days probably at 58 King Street West in Bolton, but we will be at 23 King Street West in Bolton right after. We're in the process of a move. My name is Chandler Nichol. You can find me. The phone number for the office is still going to be the same, is 905-857-0847. And my email that's probably the best way to get in touch with me. I don't advertise. But my email is CNICOL, C as in Chandler, and then Nichol, NICOL at caledonlaw.com.
Awesome. And we'll put that information in the description box below so that you can check it out. But once again, you can find us on social media, both Instagram, YouTube, all the major accounts. And you know what? Thanks again, Chandler, for coming on such a great conversation, especially talking about everything that's happening right now. But we'll see you on the next one. Thanks a lot for tuning in.
If I could make one more comment. Sorry, guys.
Sure.
I don't know if you get it. Listen, this is not just for prospective clients or anything like that. If there's a realtor or a broker or anybody who has a question and they just want to ask me something about this or some legal aspect about something, just call me, and if I have the time to do it, I'll do it. Because if I can help navigate that for anybody, that means less problems for myself, less problems for that person, and less headaches for everybody around all of our professions in the future. I'm more than happy to take and entertain calls for those things or emails. I do my best. If it's something that's a little bit too elaborate, I might not be able to help. But if it's something, feel free to ask me any questions at any time if you're in this profession.
Welcome to the Financing Simplified Podcast with Anthony Venuto. If you're looking for answers to your financial questions, let Anthony and his network of friends and associates answer regular questions that regular people have about their money. Thanks for tuning in. It's time to start simplifying your finances.